from Salt Lake. Let's bring in Alan Nuckman. He's the chief market strategist at St. Paul Research, who's got an interesting trade on his mind. But first, Alan, give me your thoughts here. We finally got a little bit of weakness in a market that's been so robust and persistent, but in fewer companies as the breadth has weakened over the last several months. How are you kind of navigating this morning's action?
Well, as I've said before, until proven otherwise, this is still a profit-taking pullback. Again, we made new all-time highs in the NASDAQ and the S&P and got within 1 point in the Dow last week. And coming in today, we're still up 15% in the barometer S&P for 2021. So still a lot of positive. You're seeing rates go down to the 120 level in the 10-year. So earnings expectations are very high, but they're coming in with really strong numbers. So a lot of this is positive to me. And we've been selling too soon, as we did with Apple and with WB. And that's really what you have to get into is sell soon and then buy the dips and look for it to come back one more time.
So, Alan, as you like to kind of look for companies that have been left behind, but in the same category of the stuff that's been working, we've been trading some of these smaller tech names. If there's a broader move downwards that pulls the laggards with it too, how do you manage those trades, Alan, if they're still on? How do you kind of look at the stuff that you're long on mornings like this?
Well, what I look at is I have time and I have in-the-money options. All I need them to do is get further in the money. And there's plenty of time for development here. I don't have to worry about a day-by-day action. Again, if we make highs on a weekly basis, that's a positive momentum move. So let's talk about, China. What I'm looking at here is laggard. And we've talked about this rotation that we've seen over and over and over again, where tech was hot, then it was not, then it was hot again. And so people find the value. And like I said, the Dow was the leader back in the spring, and and some of the money came out of those stocks and went back into tech. So the same thing I'm looking for to happen here is in China. If you look at a 5-year chart of China, the ETF FXI, it was highly correlated, almost directly correlated with the S&P until March of this year. Then they've diverged. So I'm looking for that to come back because China's up 5% in the last 52 weeks, whereas the S&P is up 35%. So what I'm looking for is some reconnection with those markets, and I think at some point somebody will find some value in the China stocks that maybe haven't elevated just yet.
Okay, all right. So you're going really in the overlooked category here, LFC. I mean, from $12.50 to $8.75. I mean, this is way down. And Alan, here's what I'm trying to figure out is you usually you're a technical guy. The trend is not in your favor here, but usually if the trend's not in your favor, then the overall group is in your favor and you look for the bounce back. But the overall group's not in your favor too here, Alan, because all the big tech China stuff's been getting smacked. So what do you like about this trade?
All right, I got something new for you. It's called bullish divergence. It made new lows last week, but implied volatility did not make new highs. So that tells me the short sellers are getting tired. It's set up for a squeeze. Now, like I said, made new lows. And I watch JJ, and I understand the extra risk in China. But the way I'm doing it here, let's pay attention to the math, because for me, it's all about the math. Number one, I'm going to throw this out there for you. The PE ratio in this stock is 5. Okay, 5. This stock has traded between 10 and 30 for 15 years, and now it's dipped below the 10 level. Like I said, some new lows here. But what I'm looking at is the 7.5 call. It hasn't been to 7.5 since 2006. So I have the right to be long at 7.5. So that option right now is about $1.25 in the money, and it's trading for $1.50. So my expiration break even is a quarter, and I'm looking at an October place. So I got 3 months of time. I've got an 80+ delta, and there's plenty of price gaps up above. If you look at the price pattern here in this drop, 11 is the near-term target because that's the midpoint of this action in the last year. And if these short sellers can get squoze, it's going to get a little shoot to the upside. And I'm seeing money flow buying into this positive money flow here down here at this bottom. So from a risk-reward standpoint, I like where it stands.
Okay. Interesting. All right, Alan, always a nuanced approach here. And
it's small. The option's going for $1.50. Now, I'm not telling you to load up on 20 or 50 or 100 of these options, but I'm just telling you I have limited risk, and the maximum risk is $1.50 per option that you trade.
Okay. All right. And I like the divergence between the vol and the price of the company. So looking for a little bit of a deal as you see it involved right now. All right. Thanks, Alan, for the trade. Chief Market Strategist, St. Paul Research. When we come back,